Hello, everyone. Welcome to our broadcast. My name is Ksenia Grishenko, and I'm delighted to have you here today for our session on investment strategies in the UAE, commercial real estate, with a special focus on Dubai. You are welcome to text in our chat. Please comment if you can hear and see us well, and we will start our presentation. Okay, 1 second. Let me try to check what's wrong with the presentation. And you can please text us now if you can hear us well. Okay, my presentation disappeared. Okay, for now, while our technical team is in this issue, let me briefly introduce our company and what we are going to talk about. Our company name is Solant, and we are operating in three main pillars. First direction of our business is immigration consulting. We offer solutions for second citizenship and residency programs in the Caribbean, European Union, UK, North America, and other directions. We also work with non-investment categories there, such as digital nomad visas, financially independent individuals options, and options for entrepreneurs. Second direction, and the one which we are going to speak about today, is international real estate investments, covering core markets in the Middle East, of course, including United Arab Emirates, Qatar, Oman, Bahrain, Saudi Arabia, Europe, including European Union countries, Montenegro, Turkey, and some others, and Southeast Asia, such markets as Indonesia and Thailand. And our goal is to help our clients to build a truly global and diversified portfolio based on their needs and goals. Third direction of our business is company incorporations, bank accounts opening, and full legal structure and support for individuals and businesses operating across the borders. Our headquarters is in Dubai, and the representative offices are in Istanbul, Montenegro, and in Moscow. We've been active in this field for over a decade, and we are proud to support more than 1,000 clients in successfully achieving their immigration or investment goals. And our approach is highly tailored and strategic, because each client motivation is different. And some of the clients are looking for a second home. Some are seeking for long-term capital protection, assets diversification, and many clients also aim to optimize their tax structure, legal structure, and build some diversified plan for the future of their families. And that's why we try to think globally and act with precision. And today on this meeting, we will focus on real estate investment strategies, and specifically we will speak why Dubai continues to attract global capital, and we will consider some market highlights further. I hope we will have our presentation back. And we understand that mostly local Dubai real estate brokers highlight off-plan properties, residential properties, and this is being massively advertised everywhere, but it's not the strategy that suits everyone. There are different needs and different portraits of the clients, and we try to build different strategies for them, looking for solutions that can provide some forecasted yields. And today we will speak of one of that, yield-focused strategies, and particularly we will speak about office real estate segment, where their opportunities are often overlooked with the proven data. So let me now introduce the team. We have a powerful analytical team, and I'm proud to have a lead analytic, Roman Reshetnikov, with a background in McKinsey and former member of real estate company practice in the Middle East, where he was specializing in developing financial models. And that's not like we provide some, marketing format of statistic. We do dive into numbers, and we will show you this today. And also Evgeny Babin, head of construction projects implementation, former CEO of one of the largest full-cycle renovation companies in Dubai, with monthly turnover exceeding of $1 million and over 200 projects completed. So, guys, maybe you can add something, and I will try to solve a presentation issue. Who wants to start?
Well, okay, I can start. I guess we have a really nice team assembled here. So we have professionals from, let's say, legal and broker side, which is represented by Ksenia. We have Evgeny, who is, really, really deep into construction, understands how solutions, let's say, affect the pricing, right? So we know all the hidden costs in that process, and so on my side is to back up every project from the financial modeling and data. So I've never seen a team like this before implementing those kinds of projects. And it's really nice to have everyone here. Thank you.
I want to ask our attendees, what is your main goal of this event? What are your main investment expectations? Maybe you can share if you have any experience in investing in real estate in your country or in the UAE, and we can speak about this a little bit. And I'm still solving our presentation. Okay, I see that we have some colleagues, realtors from properties, from Lebanon. Okay. So interested in generating high ROI. Okay, guys, this is very good because there were lots of conversations and speculations about high ROI, and I think people are sick and tired of hearing that every developer, every marketing campaign is promising ROI. And at the same time, we see clients and investors who are failed to resale, especially for the off-plan, when many agents were selling some projects promising like possibility of resale after 1 year before handover, and were promising some huge ROIs, and these promises were not based on real data. And now, for example, we can see that some of the clients cannot resell, and at the same time they cannot pay the payment plan, some installments, and that creates some dumping of the price on the market. And we need to understand that off-plan strategy can be a really lucrative strategy for some type of investors, but it is based mostly on market growth. And many people, while they're choosing this strategy, they are not considering that with whom they will be competing when they plan to exit. And many other factors that can affect the exit price. They do not consider is the entrance price is fair enough. Maybe it's too late to enter one or another location. So the analytic is actually more important than can be noticed. And many investors, we can see that they just choose to invest based on, I don't know, their friends' recommendation or some other feelings. But here in the UAE, the situation is quite unique compared to other countries and markets where we also operate, because we have lots of statistics, which is very transparent here. You all know that Dubai Land Department has all the deals in open data, and we can check the real numbers. We can check the exposition prices on the secondary market, including residential and commercial assets. And this gives us huge opportunities on analytics, and we have to use it. And that's what Roman is always doing. And that is really helping us to have solutions and decisions based on real numbers, and not on just, nice pictures and nice descriptions of properties. So let's maybe start speaking about Dubai real estate market, and I will try to do something.
Okay, we can speak without the presentation. And guys, I mean, I'm sorry you're not seeing the graphs and the numbers, but we can come back at any point. So the presentation that was meant to be on the screen actually started from, some bulk figures and some macroeconomic data. So as I remember, we can just scroll through. So I would highlight first where UAE stands out globally. So, and despite being a high income and already mature economy, the UAE is growing at around 5 to 6% annually, which is an exceptionally, let's say, strong performance for a mature economy. When comparing to neighbors like Qatar or Saudi Arabia, they show figures of around 3 to 4%. So India or Bangladesh, developing economies, emerging economies, are showing around 6 to 7%. So this is the field where we compete, right? On top of that, the UAE is rapidly strengthening its position as a global investment hub. It was number 13 or 12 global economy for FDI attraction in 2023. But let's say for our today's discussion, I would say that the more important, we have the presentation finally.
Yeah, thanks God. Thanks God.
Yeah. Ksenia, these are us. Some of the projects we implemented, so around 20 projects from apartment villas and offices to now in progress. Strategies, yes, okay, now market trends. So first one I already told you about. Second one is FDI. So what is more important here? I would say that just like imagine this, Dubai is ranked first among all the global capitals for new FDI projects in 2023, right? 2.5 times more than in Singapore and in London, and more than those combined together, right? So, and the momentum is also reflected in investor sentiment. The UAE now ranked ninth in the global FDI confidence index, and I guess last year it was number 10. So it is even improving, but still right behind, traditional powerhouses like, I don't know, Germany, France, US, as you can see, but still top 10, right? So in terms of, population, tourism, those numbers, first population, Dubai has been growing steadily, like 3% CAGR over the past 6 years. In terms of the net inflow, the last year was the record one of 170K new inhabitants. And again, the last quarter, 2025, was 80,000, right? So I guess this 2025 year will be even more than the previous one, and we will set the record. What about tourism? Dubai welcomed around 18.7 million tourists. Last year already surpassed pre-COVID levels, so continues to strengthen its position even there. So I would say that these figures, they confirm the paradigm of perception that Dubai is changing. And I recently came across this headline in the article, which really stuck into my mind, that Dubai is no longer just a stopover, It's a place where successful people choose to live. And I guess this headline really captures what is happening. We see real shift that it's not, temporary visitors anymore. It's residents and it's high-profile individuals who come in here. Just in 2024, again, this was a widespread information in all the headlines that Dubai set the new record for number of uh, millionaires welcomed in 2024, more than any other city. The total number of millionaires doubled in the past 10 years, and it is expected to double again until 2035, right? So, and the signal is clear here. Dubai is becoming one of the, world preferred cities for wealthy, mobile, active people who are seeking, forward thinking, let's say. Uh, this broader growth, I would say, and this broader trend, it's also reflected in the business activity. So in the past 4 years, the total number of companies registered in UAE increased by 150%. Around two-thirds of them allocated in Dubai. So specifically Dubai, we are now seeing around 70,000 new companies opening every year. So the latest one in 2024. This is compared to 30,000 which opened in 2021. So, and for the last 4 years, we see the annual growth rate of 30%, which is a crazy number, let's say. And this surge reflects, and this is actually not including the numbers for free zones. So those are only for Dubai Chamber of Commerce. So the real numbers are even bigger. So this surge reflects how UAE is attractive for entrepreneurs, for small companies, for big companies, right? Those numbers reflect everyone. But like if we turn our attention to international companies, they're actively expanding or opening their offices to Dubai, or even transferring offices from other locations, their head offices from other locations to Dubai. So you can see companies from various fields. Of course, there's financial sectors giants like PIMCA, Wellington Management, but also IT companies like IBM, DXC, fintechs like Yango, or for example, logistics companies like Maersk from Denmark. Those opened or expanded significantly their offices in the last years. And we see some big names also coming in 2025, 2026. So those are financial groups from Africa, for example, APSA. Those are well-known companies that are already established here, like Goldman Sachs, who are expanding their office. Revolut is opening the new office here. And I don't know if you can see behind, our pictures, but there is also a company called Vion, which is the telecom operator registered in Amsterdam, and they're actually transferring their head office here in Dubai, for the corporate reasons, let's say. So of course, this everything translates to office occupancy levels, and Dubai is among global leaders for office space demand. Grade A offices are at 95% occupancy currently, and B and C level is at 90% occupancy, right? And of course, like this is a classic supply-demand dynamic, which you can see here, that as available space becomes scarce, prices rise. And this is exactly what we see. So office vacancy rates have dropped sharply from 2021 to 2024 from 30% to around 11-12% in 2024, which drove the consistent upward trend on the rental rates, which increased by 60 to 70% overall in the past 4 years, right? So you can imagine, let's say, how attractive those investments were 3-4 years ago. But we will continue. It will be, yes. So the next slide, actually. So when we are presenting this to our clients, to our partners, the question we hear, and this is the reasonable question, right? Is this growth going to continue, right? Can you assure us that there not will be oversupply of new office stock? So we made this forecast, right? And all again, as Ksenia said, right, we have really, really nice statistics here in Dubai, which let's say gives us an opportunity to provide accurate data and accurate forecasts. So over the upcoming 4 years, we see around 740 square meters of new office supply. So last 5 years it was 500,000 planned new supply. You can see here, right? In fact, what we know is that nearly all offices which were delivered in 2024 or expected to be delivered in 2025, they were rented before the handover, right? So keeping this, even not keeping this in mind, we can proceed to the next figures. So to understand if the rental growth will continue, we try to look at the balance between supply and demand, right? We know how much, let's say, we know the figures of the demand in 2024. Even if we reduce this amount by 30% to 1 million square feet or around 90,000 square meters of demand per year, we can compare it with the new supply coming each year, right? You can see these figures. So, and this is how we can understand how much new office stock will be freed up in the upcoming years, right? So you can see 61, 49, 187, 32. And again, this is if every project that is, let's say, presented will be delivered on time, right? So we are not even concerned in the delays here. So each year, the upcoming supply, the new, let's say, freed up stock will be from 60 to 180 square meters per year, right? So what does all this mean in numbers? With even the expected supply additions, vacancy rates are projected to stay at 11 to 13% max. And historically, we know from previous slides that this level of vacancy associated with around 16% annual rental growth, which is double-digit, really nice number. And again, this is
let me interrupt you for a second because we have a couple
sure.
of questions here, not to run away from the numbers. So there is a question: will there be more supply than a demand by 2027? Let's maybe again return to the numbers of the forecast.
Yeah, of course. Yeah.
With the supply and the demand that we analyzed.
So of course, again, the new supply, we know the numbers for the announced projects, right? And again, keeping in mind that even not keeping in mind that 2025 stock is already pre-released mostly, especially in top locations. This we know. So again, from all the announced project data, we know how much new supply will be created. You can see 150, around 150 again, around 300, right? So, and because we know how much office space demand was in 2024, it's around 120 square meters per year. We said, okay, let's even take the less number of around 93,000 square meters, right? And try to estimate how much office stock will be freed up. So this is exactly the what you're asking, if you know, if there will be more supply than demand, less supply than demand. So this is exactly the let's say the exercise we did out here.
Yeah, and that is
Yeah.
also we are coming to the second question. If shall we expect price drops? This calculations that Roman was showing is exactly showing how we think that there will no price drops, especially in commercial real estate sector in Dubai, because we see those external factors that of occupancy rate, of new companies that are coming to the market, and especially how many expected spots they are going to take, especially in the premium locations. And those factors were acting before, leading to price rising. And of course, we cannot say that just the real estate market in Dubai will be growing by 15-20% as it used to be in the whole areas and the whole sectors. But we are analyzing specific areas, specific class of assets, especially office assets. Yes, Roman.
No, this is actually citywide level, right? So just let me be simple and clear. So again, the main indicator for us to forecast the rental growth and the rental rates is occupancy level. So this is number one indicator. And so to understand if the prices will go up or down, we try to estimate the occupancy level. Since we know the supply each year, and since we know the demand from the past years, we can subtract supply minus demand and understand how much new free stock will be available each year. So combining those numbers with the current stock, you can see up here, we can calculate the citywide occupancy rate and vacancy rate. So providing this doing this exercise and this engagement, we can say that roughly the vacancy rate citywide will be at around 13% by 2028. Again, this is if we assume that every project will be delivered on time, what we have seen rarely, actually, right? So I would say that with this forecast, we are actually on the very conservative side because we didn't even took we took less numbers for the demand by 30% than comparing to last year, and we still seeing companies coming, and we see big names coming, big offices, big names are making huge investments into expanding offices here in Dubai.
And
I
from
don't know
our
if I
side,
answered. Yeah, sorry.
acting as a agency or real estate agency owner and as a office customer at the same time, we see that on good and profitable places like in Business Bay, they are coming out from the market super fast, and this is very hard to rent a good space. This is really a lack of supply for now, especially for some specific areas. This we just can say without looking into numbers. And those business owners who are trying to rent an office in good location, they know what we're talking about. They know specific business centers where they would love to rent. And there is like a queue of tenants, and it's different from the residential sector as well. And while we have requests to buy an office, we see that good well-priced slots, they are coming out from the market super fast. This is also what we can just notice, like evident. So let's move forward, and then we come back to the next question. So please feel free to leave your questions.
I actually like Darius' question because it is the next slide will fully answer this question, and this is exactly about that. So growth will be especially rental rates growth will be especially strong in popular areas with limited new supply. So we know that around 1/3 of new office stock, GLA, will be created in DIFC with like DIFC 2.0 projects and some others. But at the same time, the Business Bay will only add up about 4% to the total stock. You see, it's about where is this? Yeah, so it's around just 30,000 square meters, like 1 building. And this is exactly the areas where we put our attention at, right? In these areas with the limited stock supply and those areas which are already popular from by tenants. Yeah. So when we actually form our strategy for the investments, we look at the several key dimensions. Of course, this is like the historical prices. Well, we will talk about this a little bit later. But firstly, we look at which districts are the most popular for rental searches. And again, here we see Business Bay, GLT. We then look at how rents are evolving. Uh, so the performance by area. And over the past years, we see that many districts show double-digit growth. Again, this is because of the vacancy rates and the pressure from the demand side. And here we see again one central Business Bay trade center showing around 20-35% a year. And then we also look at how property prices increased, but this we actually look building by building. But this is, just for you to to have a look. Downtown has skyrocketed in the past 2 years. Uh, of course, we will not expect those figures in the upcoming 3 to 4 years, but still there are some uh, n- very interesting listings on the market and nice strategies that could work here. Uh, and yeah, we will continue to in the next section we will show you. So again, we focus on this central location, and we expect the demand there will be still strong because of the number of factors, convenient transportation access, prestige for clients, employees, nearby infrastructure, and so on and so forth. So before that, if you have any questions before we proceed to real strategies and examples, yeah, maybe you have some additional questions and some data.
Yeah, I see that actually we can move forward, and attendees are asking, let's focus on those areas. I also see
Okay.
let us go to the strategy and numbers.
Okay.
Question about cost of living, which is considered to be high in Dubai, but for me it's very relatively. Some parts like rentals, they are higher than somewhere, but the rest, cost of living, I cannot say that it's exceptional high. Like New York, London, Singapore, even Istanbul, with the past pricing raises of the pricing, I cannot say it's much cheaper than here in Dubai.
Okay. So based on the analysis provided, we had defined, clear selection criteria for investors and strategies. Location-wise, we look at Business Bay. This is strategy number one. GLT. And for premium flip, we look at DIC if there are some freehold options or downtown. But again, for downtown, you've seen that prices already increased by 80% in the past 2 years. So it's like you really need to look for if there's some hidden gems on the market. Concerning the preferred strategies, they are dependent on the asset class and asset state at the moment. We concentrate at old category A with the light fit out, so we provide light renovation and then quick resale or rental. Our preferred strategy would be finding an all category class B office and providing full renovation of it to category A standard. And then again, rental and resale. And then we have shell and core exclusive, where we provide high-end fit out with strong margin, again, in the selected areas. Then we look at the ideal unit size because we know the demand for units. We know that the two most, let's say, popular sizes and 2,000 square feet. This is very highly competitive segment with high flipping potential and some smaller units of around 800 to 1,300, which is around 75 to 120 square meters. So yeah, those are for early stage startups or new market entrants. Yeah. So this is just a quick dive in what is happening currently on the market. This is an example of a building on the Bay Square, which is located in the Business Bay, Bay Square 8. It's a modern commercial building, category B, on the Business Bay. Again, it has around 100 units, built in 2000, finished in 2014. It has let's say, really nice location connected to Sheikh Zayed Road, Al Hayl Road, and so yeah, very very nice building with the, let's say, atrium and the yard located in the center. So let's look at what has happened with this building over the past year. So as you can see, in the last year, the entire office floors being purchased, right? You can see, sorry, because yeah, I cannot see because of our faces here. So you can see, for example, 4th of April, I guess it was floor 8, right? Around 7 units being bought. You can see then floor number 4, floor number 5. So all of them will be, and you will see all of them or some of them will be available on the market in the future. So at the same time, you can see that renovated units, 15th of May or 19th of March, were bought by around, let's say, 2 times from the original price, right? So this is exactly what we see on the market. So those nice buildings of category B, which provide opportunity for nice renovation and turning it to category A office space, they are being, and this is exactly what is happening in the whole Bay Square cluster. Which consists of, I guess, as I remember, like 12 buildings. If we look at them, like on the listings, you cannot buy non-renovated units, so they're not available for sale already. You see 9 offers. 2 offers are end of March, and yeah, let me be clear here, they're overpriced because I've been looking at them for some time already. And 7 other offers are recently new, so around end of June. And the average listing time is around 1 to 2 months. So for the not overpriced offer, I guess we can fairly say that it's around 1 month. Transaction history also shows high market liquidity for rentals. Sorry, for rentals, you can see that again, like you can see some deals in June, in May. So from our let's say statistics and looking at this building, we can say that the average listing time for the lease of the office is less than 1 month. Again, we see 7 offers currently, 2 offers from the end of May, and five others are very recent, end of June. So again, average listing time is around 1 month. And when we were looking at this building like a month ago, I guess the average listing time was around 2 weeks.
We have a question about the difference in rental prices for renovated and non-renovated units, and is it also 2 times different?
It depends on the contract, if it's the renewal, right, and if it's new one. But yeah, you can see here. Let's find some. Yeah, I would say it's around 2 times. It's around 2 times. So for the new office of around 100 square meters, 110 square meters, you can expect around 600,000. So this is a little bit speculative side, yeah. So this is a little bit of the speculative side slide because this shows, let's say, the state from last year. What would happen if we buy an office like that in May or in June, July 2024? So we could buy it for around 2 million, and uh, yeah, the price for which it's sold it's around 8 million currently. And I guess this is still on the market, but again, if they decrease the price by, I don't know, 500,000, it will take like 2 weeks to. So the question, how much time does the renovation take? I guess for this space, or we have
Yeah,
Evgeny
I
here
just
who can
really
answer.
wanted to speak a little bit about renovation part, because
Yeah.
that's actually one of the main fear of many clients, to connect to renovation. And anyone who was doing some renovation, and even in his own apartment, they know that timeline can be changed. The cost of everything can increase while you're already in the process, and you cannot stop it in the middle. And it's actually one of the weak zones potentially. And that is why we are really happy to have Evgeny and his team, because we have full control on this part. We have full transparency on the costs, on the timeline, on everything. And it's not like it's something unexpected that you cannot predict. So Evgeny, can you please share of this part, and also let's cover the part of in particular office spaces renovation timeline and how it's organized.
Yeah. If we'll speak about timeline, in average duration of renovation for like average office, let's say 100, 150 square meters, it takes around 2, 3 months from the beginning till the end. It depends of what kind of approvals we need to take, what will be planning solution, etc. But in average, it's around 3 months. Uh, Also, I think it's a big advantage and why our this system is working, because we have in-house design team, we have in-house team who is organizing all work permits, all permits from authorities like civil defense, etc. And also, of course, we have in-house labors and project management team.
And
And
it's important, that's not the first time we are realizing projects with the same exact team, and we have confidence in them that they will not disappear, they will not just do the work badly or some other things. And also the client doesn't have to think about how to get work permit, what are the requirements from one specific developer or another, because all the rules are different here, and bureaucracy is a headache everywhere.
yeah, we have question, what is usual renovation price per square foot? We will have it in model and we will show you, I think, next slide, we have a model and we will show you like example of from the beginning, from purchase of office till we are selling it.
So for this model, because returns were crazy, I put, let's say, the biggest possible price for premium renovation, which would be around 5,000 dirhams per square meter. But again, for most of the cases, we will use, let's say, more reasonable figures. And yeah, let me continue to this example, which is a little bit simpler renovation. I guess we took around 300,000 or so. Yeah, we put around 2,300 dirhams per square meter. So this is a mistake in
Yeah.
this. In this
And
instance.
it is depends, of course, of what is class of office we want to make. If we are making like middle class office with furniture, with all finishing materials, with everything, it is cost around 3,000 per square meter. If it's something luxury, it can be around 5,000 per square meter, like based on our experience.
So yeah, again, for this model of this for this space in Bay Square, again, we used the let's say tile limit, right, of 5,000 dirhams per square meter. But so I don't know if we might continue with the model, right? So we when we calculate the return net profit for the investor, we take into account all the fees, like broker commission, DLD, blah blah blah. Then we calculate renovation. We calculate service charges for the common areas and utility expenses for the time that the of renovation, total expenses. So we provide the full model to you, and also the cost estimate when we select the object. So you can go and see one by one where you spend your money, and again, and we are reaching the profitability in most of the cases that let's say we promise.
Yeah, but
Yeah.
I think we should show another slide with another model because it is the last year model now. If we are expecting
Okay.
not so.
Okay, guys. So again, this was a little bit of the speculative model, right, that we showed from the last year, and there's still highly attractive listings that are available on the market. And let's say the most affordable properties in Business Bay, they now start around 1.7, 1.8 million dirhams. For around 100 square meters for the, let's say, partly finished, mostly close to the original finishes offices. This is an example of the office in Prism Business Bay. And this is the example of the same office renovated in Prism Business Bay on the market currently. So being sold at 2.6. With this exact listing, you can get around 30% return in 1 year, right? And again, you can see the model out here: property purchase price, all the charges, renovation, total expense, sale price, and yeah. So those offers are available on the market. Before we start, let's say, the purchase process. Or Ksenia, maybe you can talk about this. Yeah, how the process is being built.
Wanted to summarize. So the strategy is working. This is also visible. We just showed you how we are building the financial models, and these are raw examples. And when we work with particular requests from the client, we prepare the detailed financial model. We are preparing the detailed costs of all the renovation works, and all the details will be discussed before we start. We need to select the exact property ourselves, because this is the key factor of getting yield, is to have the right entering price, right? If we are buying overpriced, we can only rely on some hopefully market growth. So we are selecting the offices that we believe would be suitable for this particular financial model. We are talking about the expected yields. We define the timeline when we are going to exit and how we are going to exit. Because as Roman showed, we can exit with a full resale, or we can keep the asset as it's bringing quite large for the current passive income returns if we're just rent it out. Or it can be a combination: when we rent it out, hold for some period of time, getting, let's say, this 13-14% of net return on the rental, and then we resale, and this is increasing the total capital appreciation. So this all we need to discuss with the clients, and then we are preparing the exact model and the financial structure as well. So also, if you're a resident in the UAE, it is possible to use a pledge. like a mortgage, but this needs to be discussed separately with our mortgage advisor. But we have experience on that, and of course, using a pledge increases the return significantly. And regarding the structure of the deal, it also can be structured in a different way. It can be on a full ownership of the investor if he is working alone. It can be it can be structured through SPV, some company that we register for you in one of the free zone in the holding structure, and this, of course, this adds some extra costs for company incorporation, but that can be useful for some long-term strategy if you are going to do similar deals year by year, or if you plan to go with co-founders, and that can create some transparency in transactions. And for tax reasons, if you're not resident in Dubai and live in other countries, you can like a bit vary of the tax period when you're exiting and distributing dividends. So these details can be discussed separately. But in totally, we have different practice with that type of deals, and we will be happy to discuss each request with each client. So, yes, I see the question about the credits. We can discuss mortgage for the property itself. For the financing of the renovation, we probably it is possible if you're a resident, like you can just take a simple consumer's credit or something like that. It is possible, and I think for particular requests we can maybe add it to financial model as well, right?
Yeah,
Okay.
we have the financial model for mortgages as well, and of course we see numbers being, let's say, 2 times improved, more or less. Yeah, I forgot to show this model for, let's say, long-term investment where we don't resell the property in, like, let's say, exactly after we did the renovation. So for the exact same property, which I showed you before, right? The long-term yield from renting would be around, let's say, 13 to 14%, and this does not include the asset appreciation each year. If we include asset appreciation and selling of the asset in 5 years, let's say, we can get around 30% return. And again, like you can see all the numbers here, they are all from, let's say, DLD, right? From the real deals, we know, as you've seen before, for how much you can rent this space, exactly this space, exactly that unit. You can look at the past transactions. So again, all the data is, is open and provided by the market. So yeah, those are the real numbers.
Yeah, so let me summarize. First of all, this is a value-adding strategy. So meaning that we expect returns that are backed by some additional value that we bring to the project. And it's important that we can control this value because we have a construction redevelopment company that is totally ours. And we have pure understanding on how it's going to be done, what the costs are going to be, that we can be sure that it's not overpriced and nobody is playing with us. And it's quite a short-term period, and it's much easier to build forecast based on 6 months or 1 year above compared to 3-5 years period, especially nowadays when the world is super unexpected. And 1 year, it's more or less, okay, we can guess what's going to happen when something will be handover, and tenancy contracts are also long-term. So it's much easier to predict, and it's much easier to control, and it's much easier to implement. So summarizing that, you can, if you're interested in that, we can have an individual session discussing your particular interest on how much budget you plan to invest, how you want to structure this, and we can advise what particular offers we can offer you in the market and how to structure all of that. Besides offices, we also work in some different sectors. I think it's one of the latest slides. I actually cannot see the presentation, so Roma, you can find it.
Sorry again?
Yeah, can you show maybe? I think we had a slide where we're describing our other renovation strategies, which we also can
Sure.
do in the UAE, because we don't only work with offices. We just see it's a great opportunity, which is super on hype right now, and we offer you not to miss that. That's why we started from that. But there are also some other strategies which we can offer you in Dubai.
Ksenia, while I'm listening, Darius is asking why we are not doing this ourselves. Like, maybe you can provide some information on that.
Yeah, we actually are doing that ourselves, but our part of work is also helping investors to implement one or another strategy. So that's why we are sharing that with you.
And I would like to add that we have now currently 5 projects in progress that, and we are able to do more. That's why we don't have enough cash to do it only for us.
Yeah, and we have investors, like some of our investors that are long time with us and they are trusting us. They are not asking, I want to buy something in downtown or in Dubai Islands or in Jebel Ali Palm. They say, I want that amount of return. Where do you think it might be? And that's why we were looking for good analytics, because it is something that needs to be analyzed, especially when we have all the data transparent. And when we started to work with guys, that was the moment we felt confident about the strategy. And that is actually much easier to predict and to forecast than, let's say, to forecast some off-plan increases, because there are many external factors which we need to rely on: the government, on the master developer, whether, I don't know, trade center will be opened or not will be opened, whether something can be, changed after 2-3 years, and so on. And here we work with secondary market, with the stated and already profitable locations, premium locations. We can see the flow of tenants, we can see the demand on that, and we understand how we control the value that we are adding. So this strategy is super transparent and easy. Okay, what is this strategy? In this way, as a mainland company, commercial loans are very hard to obtain in Dubai. We can discuss this separately with the mortgage expert, and I think commercial loans are not easy, definitely, and there are many factors that bank is considering, like the financial assets that you can back up and some other factors. But for example, for residents, mortgage is quite easy if you have a source of funds inside of the country. If you have source of funds inside of one of the European countries or in the US, it also works. But source of funds from some countries where the local currency always fluctuating, they don't like it. But better speak with the bank expert, mortgage expert. Okay, so let's also say a couple of words that we also work with villas here, with like flipping strategy for some of the apartments. And guys, if you are interested in that, you can also share this information with you. Yeah, recording will be shared. Minimum. Okay, great question. What is the minimum budget that we could try out working? So Roma, can you share with us for offices, for villas, for apartments, maybe?
Yeah, again, for offices, what we see, again, concerning the business bay, that the most affordable unit would be, including the renovation, from around 2.3 million dirhams. But again, if we are doing this through SPV, we can attract numerous investors, right? So this depends if you have a co-investor, it could be less. If we look at the other asset types, like apartments, for example, in touristic areas, we see those starting from 1.8 million.
Okay, thank you. So if you need to convert in dollars, so offices, it's around $660,000, and apartments, it will be, okay, let me divide, something like 400, yeah?
Oh, 500.
Yeah,
More
500,000.
closer to
500.
500. Yeah.
But this is including renovation and yeah, this is the minimum starting prices. But as Roma mentioned, we can use joint investments and form it in holding company. Okay, guys,
But
thank you so much.
maybe the last comment here is
Yeah.
that the less affordable the unit is, the more affordable the unit is, right? The higher is the competition for that one, and this is exactly what we see happening in other business bay. In other business bay buildings, for example, the prisms that I have been showing for the last couple of months, we see more flip project emergence. For example, this is why when looking at villas, of course, we like areas like Springs, but we also look at less affordable units, for example, in areas like Meadows. So it's let's say it's a big question. Let's say, let's put it that way.
Okay, thank you so much. And I apologize for technical issues. I still don't see the presentation, but I hope that that still allowed you to enjoy our broadcast session. And those who are interested in personal consultation, please let us know. We will share the recording, we will share the presentation, and also the contact form where you can leave your request for the individual session with three of us. And we are here to help you to provide all our knowledge and information to make it a right solution regarding your future investments. And have a great evening, everyone. And thank you so much for your time spending this hour with us. Thank you, Roma.
See you
Thank
around.
you.
Thank you.
Bye, everyone.
Bye.
Bye.